Okay. On there yet? Got 6 already. Good.
Mhm. Yeah, we'll just let
It's
everyone,
early. It's
everyone
early.
can hear us. So let's just. We're just going to give everyone a little bit of time to log in here. We're right at 5 o'clock now, so we'll give it a few minutes for everyone to log in, and then we will start your seminar, Asset Protection and Insurance for Rental Properties. Thank you everyone for joining. We're just going to give it a few more minutes for everyone to log on. We'll maybe wait 1 more minute, and then we are going to start your seminar for today. And meanwhile, in the bottom, feel free to put any chat that you may want to chat to us in the bottom, any questions you may have, or just to let us know that you're here. Okay, so we're going to go ahead and get started with our seminar this evening. My name is Christy Dietz, and I'm here with Stan Dreckman, and we are going to be broadcasting tonight Asset Protection and Insurance for Rental Properties, brought to you as a free event from Marshall Reddick Real Estate. We're all very grateful that you have decided to come on our course tonight. And there is a chat section if you would like to ask us any questions during the presentation. We would love to answer you as we can. All attendees are muted other than in the chat button. And I'm going to go ahead and start the seminar. Our first slide is on Marshall Reddick Real Estate and who we are and where we're located, what we are. Marshall Reddick, we're not only a real estate brokerage, we're also a property manager, we're a private money lender, and we're investment fund. And we really make it possible for people to purchase real estate in our carefully selected areas in the United States. Our organization really provides brokers, contractors, property managers, and access to the top lenders, CPAs, insurance agents such as Stan, who's on our call right now with us, and attorneys and much more. You can always reach us at marshallreddick.com. I just want to tell you a little bit about myself. I actually joined Marshall Reddick in 1996. I moved to Los Angeles in 1995 and accidentally came across one of Marshall's classes at Santa Monica College and jumped in the class, and I was hooked ever since. I graduated from Florida State University with a BS in economics and a BA double major in marketing and management with an English and emphasis in business. I originally joined Marshall Reddick as an investor in 1996, and then soon became a Marshall Reddick agent and instructor starting in 2000. And I am still with Marshall Reddick today, and I'm still an avid investor. I've had a 23-year career in real estate, and I've sold over 500 properties. I've also purchased 22 rental properties through Marshall Reddick, and Stan Dreckman, who's speaking today, has done many of my insurance policies and umbrella policies over the years. I have experience with builders, developers, investors, project managing jobs, leasing, all facets of real estate. I pretty much grew up on job sites with my dad as an engineer and builder. I'm a mom of single mom, may add, since my kids were really little, since they were about 4, of 2 college-age children, Harrison and Olivia. And I volunteer often for Philozoa Animal Rescue, and I have 3 dogs, 2 of which are rescues. You can always reach me here. I'm a real estate advisor as well as a Los Angeles realtor, and you can see my number and email right there on the bottom right of your screen. So Marshall Reddick, this is our office and our footprint, our boots on the ground offices. We're located all over California. We have boots on the ground offices in the Bay Area, in Los Angeles, Orange County, and in Riverside. We also have 4 offices in Texas, Austin, New Braunfels, San Antonio, and Houston. We have an office in Cape Coral and Handle Olive, Florida. We also have offices in Nashville and Clarksville. Myself, I have multiple properties in Florida, California, and in Clarksville. How do we choose where to invest? We choose based on the job market, how many people are moving in and out of an area based on jobs. We also choose based on vacancy rate. We want as low a vacancy rate as possible. We also want cities that have great economic diversity. Housing affordability is a must. Landlord-friendly states. We also want areas with strong education, universities, also sporting events, national football teams, hockey teams, things like that around, and reliable property management. I wanted to introduce you to Stan Dreckman, who is going to be hosting most of the presentation today. And I have known Stan since 1996. He has been a licensed agent for over 45 years and a property manager for over 20 years. And he owns Huggins Dreckman Insurance and has been a sponsored agent with Marshall Reddick for over 25 years. And he will be speaking on real estate and insurance for you. And he is just a wealth of knowledge. And I've learned many, many things from him over the years. So I'm going to turn it over to you, Stan.
Thank you very much. Appreciate it. I'm glad to be here. Yeah, we worked with Marshall, and Christy reminded me just the other day how long we've worked together. I had no idea. Anyway, time flies, but we've had a lot of fun, and we've seen a lot of people become millionaires and have done very well with the Marshall Reddick Network. We are firm believers in Marshall's program. So yeah, we've been around. Michael is has the property management experience. He was a property manager for 20 years, and we brought him over to the light from the dark side. Just kidding. So he provides some valuable insight as to what property managers need, and he works with some of the realtors when they have questions on that issue, and he's learned the insurance game very, very well. So we are able to let's see. Somehow, Christy, I lost my, there you go, thank you. We're set, okay. The purpose of insurance basically is to keep you safe from financial loss due to accidental or predictable events. That's really what it's all about. That's why you buy insurance. Many people think you buy it because you've got a loan, and the answer to that is no. You buy it because you have an asset and you want to maintain that asset. The asset can make you money. The intent is to make you a lot of money over the years. No point in letting it burn to the ground and having inadequate coverage. So we're here to make sure that you are in good financial shape following a claim. The landlord insurance specifically that we're going to talk about tonight and look at some of the parts of the policy we think you need to know about, the coverages and the exclusions, which are very important. And you're going to see how well your Marshall Reddick property managers will fit the bill and will keep you out of trouble with insurance exclusions and other clauses. It works very, very well together. A lot of symmetry here. So landlord insurance, basically we're covering 1 to 4 family homes, which is what you're seeing. You're seeing a lot of single family duplexes and fourplexes. We purchase what we call, we also insure what we call rent-ready contents. That's a good item to purchase. Many places are going to have a lot of rent-ready contents. You're going to have your washer, dryer, stackers. You're going to have refrigerators, things like that. Those burn in fires like anything else. You want to make sure that's covered. Loss or rental income. This is very important. This is what keeps you in good financial shape when you have an insured loss. Example would be, say you have a fire, kitchen fire, and someone sits it on fire accidentally. House takes 6-8 weeks to repair it. They're not paying you rent, they're paying rent to the local Marriott Residence Inn. So we will pay you your lost rental income. So that's the point of that coverage. And then liability protection is you are sued. So that's really kind of an overview of what a landlord policy does. In the property side of the landlord insurance, what does it cover? That's always the big question. I'm buying this and I have all these exclusions in the policy. Does it cover anything at all? Well, it does. It covers the basic things that are going to happen to you when you own property as a landlord. Fire, of course, you worry about. Wind and hail damage, that's something that happens not so much here in California, but you're going to see that in parts of the Midwest, South Texas, you're going to see wind and hail events, and sometimes they're pretty rough, and then that's what the insurance pays to repair. Vandalism to your property, that just happens anywhere, any place you go, that's part of life. Water damage from broken pipes and appliances. This is probably the most common claim you will have as a landlord when you are maintaining your property. It's the most common claim for home ownership. Water damage is your #1 property claim. It just is. Pipes break, appliances leak. These things happen. So this is why you buy that kind of coverage. There's a lot more than that, but those 4 items are 95% of the claims that you're ever going to see as a landlord. Now, things we don't cover flood, and we don't cover earthquake. Flood is water coming from the outside in. Waters rise and come on, and the river rises, the ocean rises 10 feet and comes in and inundates your property. That's a flood. Earthquake, we all know what earthquakes are. So those items are not covered. However, you can buy coverage for those. The liability claims, this is the second part of the landlord policy. You have property, then you have liability. Liability is basically an injury happens to somebody else, what we call a third party, and you're held responsible. A good example would be a neighbor or a tenant slips on overflow of a broken water line. We had an actual claim where someone's had septic and it crossed over the sidewalk, and they're out in the morning going to get their paper, and they slipped on it because it was like ice, and they fractured their shoulder, and there was a claim resulting from that. That's what your liability policy pays for. But liability goes well beyond people getting injured. We think of bodily injury, but property damage. Water runs all night, and you're elevated above your neighbor. Neighbor gets up in the morning and they're walking into 2 inches of water, and they're walking in the kitchen and make coffee. That came from you because your sprinklers ran all night. That's negligence, and there we go. Or the biggie that everyone worries about is you're accused of wrongful eviction by your tenant. Your landlord insurance policy should cover this. Not all do, most do, but not all do. You always want to ask about that. Make sure that that is a covered item that you are insuring when you're buying insurance for your property. Very, very, very important. So we're going to kind of show you what a landlord policy looks like, and no matter how many times I adjust this slide, it moves. I'm sorry about that. It just does. Let's say we had a 1-story duplex in Seguin, and we have $355,000 of coverage on it. You notice how it breaks down. We have $12,000 of personal property coverage. Rental income, you notice, is 10%. It's not it's in addition to the dwelling amount. That's what that coverage is for. Again, it's to protect your loss of rental income when someone has to vacate due to a claim. Liability protection, $300,000 is a bare minimum. We prefer to see $500,000 when you can get it. Medical payments. This doesn't mean your policy limits you to $1,000 if somebody is injured. This is a coverage where if someone, say a guest of your tenant, slips on the stoop coming into the house, and there's some kind of a issue there. If it's a small claim, they go to urgent care and they come back with a $500 or $600 bill, and you turn it into the insurance company. They're probably just going to pay that, not have any questions about it. If someone's severely injured, it goes right back into the $300,000 worth of coverage. So you have coverage there as well. Deductible is a good point for getting insurance. The best purchasing point in this particular property is a $2,500 deductible on all covered perils except wind and hail. Wind and hail carries a 1% deductible in many policies. In this particular policy format, it does. It's 1% of the dwelling amount. That's typically what it looks like when you're looking at these things. There are some endorsements, though, that you should have on your policy, because what you saw really wasn't enough. It wasn't enough coverage to do what you want it to do when you own the property. You want to make sure you have a replacement cost, and most companies will give you a replacement cost if you're dealing with a valid landlord insurance company. The Travelers, a Safeco, a State Farm, companies like that, the biggies. You also want to see, and this is very, very, very important, is this extra coverage, what companies will call extended replacement cost. And in this particular example, we're using 125% of the policy limit. So visualize a $200,000 policy. You have an extra $50,000 of coverage, or 125% of the limit, to put the house back together again, because none of us has any idea what it's going to cost to fix the building when it's had damage. And if anyone's ever done a remodel, I defy anybody to come below a 50% override. It just doesn't happen. Otherwise, you find more than you think. If you have a total loss, again, we do our very best. We go through all the replacement cost estimators, but we don't know when the loss occurs, how much it's going to cost. So we have a hedge here. That's to protect you. That's part of your replacement cost that you should have. Not every company will give that to you. This is a must. Building ordinance is also a must. Mostly with Marshall Reddick, you're getting newer properties. This isn't really going to come to you as an issue until you're maybe about 5 or 6 years down into the policy. But think of all the people that bought properties in Texas in, let's say, 2015, and then they had a freeze, a super freeze, 3 years ago? When the house has to be replaced following a total loss, there's going to be some differences in how the pipes are connected to the exterior and the interior, because they all popped. And because Texas just didn't have claims like that, didn't have freezes like that of that veracity. So it's something that you do have to take care of, and building ordinance does that. Building ordinance basically improves your policy. It upgrades your policy to pick up current building codes when you have a severe claim. So you want these 3 elements to be added to your replacement cost. It's crucial coverage. So this is really what a policy would look like to you if you bought everything that there is. You're going to have replacement cost, your extended replacement cost of 125% gives you an extra $88,000 of coverage. In a duplex, you're going to want about $12,000 of rent-ready contents coverage. This is your loss rental income. This should be enough for a duplex. If not, we can always increase that. In this case, $500,000 of liability coverage, and we extend the liability coverage to your property management company. They're going to ask for that. Any property management company is going to ask for that. The problem that people run into is they wonder, well, why should I be adding my property manager to this? Well, there's a lot of reasons. I'll give you a legal one. Is when you sign a contract with any property management company, you are indemnifying them for injury on your property to a public or the tenant. So you make sure that you add the extended liability. If a company will not do that, you don't want to use that company, because I guarantee you, any property manager you're using is having you sign, and there's that clause where you're indemnifying that property manager is inside the clause. And then you notice the ordinance of law coverage here, and then your deductibles. This is really the basics of how a good policy should look for you, and we hope that's how you purchase it. This is how we will sell it to you. Total loss scenario, and here's kind of a example of what we're talking about with the extended replacement cost. Let's say we have $355,000. And let's say it costs $386,000 to rebuild the house following the total loss, including the building codes requiring a change. Your typical insurance company is going to pay you $355,000, but your claim was $386,000. That's not a good deal for you. With the extended replacement cost that our companies will give you, we will pay the whole thing. You're not going to have to worry about being short, in this case, over $30,000 out of your own pocket to pay for the claim. So properly insured, these issues are non-issues to you. There are exclusions in landlord insurance policies. These are things you need to know about. There's nothing to be afraid of, because they are all of them can be handled except for the very obvious ones, which are just not insurable. But earthquakes, you can buy earthquake insurance. Flood, you can buy flood insurance. It's just there. Now, freezing is a big issue. Damage from freezing of pipes while vacant or unoccupied. That's a huge exclusion. That's from day one of a vacancy. This doesn't affect us here in California. If you're buying property in California, unless you're buying up in the mountains. But if you're buying, I don't know, in Indianapolis, you could very well have an issue here. It could be a problem for you.
Yeah. And I just want to add to that. This is Christy again. That happened to me. I had a property in Memphis, Tennessee, and I didn't know anything about freezing pipes and that you're supposed to winterize a pipe. And my property manager, who I had at the time, that was not a Marshall Reddick property manager, and they did not winterize my pipes, and the property was vacant. So the pipes burst in the home, and I ended up having to short sale the home because the property was so damaged, and the insurance would not cover any of the water damage, and mold had occurred and everything else. And it was just horrific to have lost that house because of that. And it was a big learning experience.
Yeah, and the great thing about having professional property management, this is why we always tell people, never be your own property manager. You want someone that's out there all the time that can take care of these things for you. With correct property management, it's a non-issue, because if that pipe bursts while vacant and you have winterized your home, you have coverage, even if it bursts, even if you've taken all the proper steps. As long as it's been winterized by your property management company, you are covered. So that's a huge, huge issue, and yet it's so easily fixed, so easily fixed.
Yeah, and I was going to ask you, also, Stan, like, I know, like, I have a flume device on my house. When you spoke about the sprinkler systems that can break and cause flooding, which I've had some of that happen before too, and I got something called a flume device that I put on actually the entrance of the water into my house. And I'm wondering even if that can be used as a discount from insurance, because you're able to see right away on your phone if you have any sort of leak in your plumbing.
Some companies do that and some don't. That's not often seen on a landlord policy. It's more and more being seen on the homeowners, and things kind of run from. Our industry is odd. We kind of start at one spot and end up at the end, and they're doing these now with homeowners policies, the smart devices and things like that. Some companies are starting to adopt it and some aren't, but that will be the wave of the future, because that's how they're going to stop these claims from at least getting very bad. So yeah, not right now am I aware of any company that does that, but in rentals, but I do expect it to be coming very, very soon. Sooner than, I would think in the next 2 to 3 years, most companies are going to have that, because they're already doing it, like I said, with homeowners policies. Another exclusion in your policy is a backup of a sewer and drain. What that is about, that's different than water damage. If your pipe bursts in the house and causes a problem, it's covered. But you might have, and this is going to be for a house that's been around for a while, you're not going to have this with the newer houses. Older houses, older by being maybe 7, 8 to 10 years, vegetation has had a chance for the roots to get in there, and they will go where the water is. They will find cracks in the pipe, microscopic cracks in the pipe, but it's wet and those roots will make it in, and just one day pipes are fine, and then the next day the water's reversed on you, and it all comes into the house, and it's got bacteria and it's kind of a mess. That's an exclusion on landlord policies. You can buy limited amounts of coverage with many insurance companies. Our companies, Travelers will give you $5,000 of coverage. Safeco product that we have will give you $10,000 of coverage. And outside of California, that's usually a very adequate amount of coverage. So that shouldn't be a big deal.
And I wanted to add to that too, Stan, that I've had clients over the years that have purchased this type of insurance for their sewers. And in Los Angeles, particularly, we have clay pipe, and those pipes break often and roots go in there. And to have this extra insurance for your sewer is a huge benefit, because not all insurance companies offer that.
That's correct. Yeah, it's one that we think is important to buy. Not everybody buys it. I'd say maybe only 50% of the people buy it. Here's some other exclusions: pollution and mold. There's a limited amount of coverage that will apply on the property. We'll pay up to $5,000 of mold remediation as a part of a larger claim. Again, that is usually adequate. I haven't seen it go over it yet, but doesn't mean it couldn't. But typically it's going to fall way in line, particularly when you have the property management, because the property manager has been told by the tenant, and the property manager is out there with the property, and they get to it and they get it taken care of. So that has not really been a big issue. Settling or sinking a foundation, so we can't insure that in California and Texas, where we have heat. Arizona, maybe not so much Arizona, but I would say in Texas and California, because of our ground and stuff, houses settle, and there could be issues. Typically that's not covered. That's just called part of owning property. Here's something that's a remote exclusion, but this could happen. This is probably only going to happen if you have older properties or you go out and buy older properties. Some strategies of some purchasers of property is that they want the older stuff because they think it cash flows better. But it has special issues such as this. Your tenant is renting the home and he's doing auto repair on the side in his detached garage. That is really your detached garage. If he causes a fire there and it burns the ground, there's no coverage because there was a business operation in the detached garage. It could be auto repair, it could be Mary Kay, it could be anything. If you're operating a business and you're using the garage, a detached garage, that's the important words. Detached, in this case, unattached buildings is how they put it in the exclusion. There's no coverage for that. However, when your garage is attached, they can Mary Kay it all they want. Damaged by pests, rodents, birds, pets, and other animals. You want professional management all over this because the minute it occurs, it's got to be remediated so it doesn't become a problem and it's just more of a minor expense to you. But insurance companies do not pay this. We get questions all the time. Will we pay for the cost to take care of the termites? No, we don't do that.
Yes,
it's not a part of the program.
I have another story on that, Stan. One of my rental properties in Orlando, Florida, which was not able to be managed by Marsha Reddick, and I had a manager that was not doing a good job, and the tenant vandalized the property. And when I went there to go in the property, there were thousands and thousands of German cockroaches hanging from the ceiling, all over the house, and it cost me $2,500 out of my pocket just to eradicate the German cockroaches, and it took about 4 different treatments to be able to do it. And I even had to replace the air conditioning system because we got all inside the air conditioning and the ductwork and everything. It was a big mess, and insurance would not cover it.
Right, and so this is where your property manager is going to save you that $2,500 because they're going to be there. They're going to be monitoring a rogue tenant. They're going to be taking care of a lot of things. They're not mind readers. They can't take care of everything, but you are so much better off with property management. We have the stats. It's mind-boggling the difference. Other exclusions in property coverage, theft of anything not permanently installed. It's just the way that it is. So if they rip out your air conditioner that's been permanently installed into the concrete, that's fully covered. If they walk off with a beautiful I don't know, statue in the front yard or something like that you have there for looks, it's not covered. It's not permanently installed. Wear and tear basically is the big thing that you worry about, and that's where your property management comes into play. We have all owned property where we've had tenants. Every once in a while, a tenant is, they're just hard on a property. I bought a condo, my first property I ever owned. The prior tenant had changed the oil on the carpet. I mean, what are you going to do? So that's not covered. So that's just part of the, we replaced the carpet. It's just the way that goes. So those are a lot of things you can get and a lot of things you can't. So we do what we can, but those are regular exclusions. Now here's one to be aware of. This is more of a California style deal, and you'll see it down in certain parts of San Diego, the mountains, out in the high deserts. In California, is if anybody's got an illegal manufacturing or growing program going inside the home that you are renting to them, there's no coverage for that. So if they cause any damage, yes, you're on your own. That's where having a property manager on site out there, we're looking at those properties very closely is very, very, very important. A real key to saving yourself on that is do not ever accept 1-year cash advance on your rent. That's a giveaway that you're going down. Don't ever do that. Other than that, your property management company, Marsha Reddick, they're going to be all over that, and they're going to make sure that that does not occur. But we kind of think that's a fun exclusion, but it's also a very expensive one if you're caught in that situation. When we establish replacement costs and things like this, we will go through various links and methods to make sure that we're doing it correctly. We don't go based upon the selling price. We don't go based upon the square footage solely. We look at we look at everything. We look online, we'll look at several sites. If it's a brand new property, we'll look at other properties like it that have been sold that are on the same block. And we'll get an idea of what's in them so that when we're estimating replacement costs, we're estimating it based upon real facts. So just want to let you know that we aren't just winging these things when we're doing it. We are pretty tight on that. Liability coverage, the other half of the landlord policy. This is again when someone gets injured on your rental premises. The insurance company will pay to defend, and then they will pay claims for bodily injury or, as we mentioned earlier, property damage arising from your property unless it's otherwise excluded. You have a liability basically when you are responsible for an outcome, especially if the law says you're responsible for it. And in most of the cases, we are going to cover it. There can be some cases when you're responsible where there are exclusions. You're going to see those in a second. But again, 90% of what you're going to run into is covered by your landlord insurance policies. An example of a claim is trip and fall. The sprinklers, we mentioned that one already, and then the neighbor's home where it gets damaged, and then the wrongful eviction. Again, that's where your tenants threaten you. They're going to sue you if you wrongfully evict them. They usually don't, but if they do, then you have coverage for that. Exclusions, expected or intended injury. Well, that looks very, very obvious, but that's where crazy things happen. People throwing frozen water bottles at each other, things like that. Intending to hurt somebody or intending to drive somebody out of the property because you don't like them for whatever reason. They bring a lawsuit against you for that. That's not covered. If you violate the laws or ordinances or someone that commits a violation on your behalf, I'll tell you what they're talking about there. It's very clear to us that we've done this a lot, is that a lot of times people will have a family member who lives in the area where the property is that you own and you're renting, and you'll ask them to verify the tenants and to have them do all the paperwork, because you can save a few dollars a month on the cost of property management. Well, you can easily violate the laws. It's simple to violate fair housing laws. Those are national as well as state. And so it becomes a problem to you. So what do we say to get around this exclusion? You use professional property management. Marsh Reddick's there. They know the laws. They know the laws of the areas that they are in. That's why they have boots on the ground there. You can't manage a property from California and Texas or Tennessee. A lot of people are trying it, and usually it really doesn't work. So that's how you get around the exclusions, property management. Rendering or failing to render professional service. So if you try to help somebody and you, well, that actually would be a good example of professional services. You have someone acting for you as a property manager who isn't a property manager. That's a great example of what that exclusion is about. We don't cover other locations. These are location specific. So if you have 3 or 4 properties that you own, one policy isn't going to cover that. And as silly as that sounds, we get that question a lot. So just remember, one policy, one location, unless you have a commercial format of a policy and it's scheduled. But the address that you need to have insured must show somewhere on a policy. And we don't cover punitive damages. No company, no company does, unless certain what they call legal jurisdictions will cover that. In California, punitive damages are not covered. In some states, maybe 10%, or some states maybe fully. Most states, the trend is not to cover punitive damages, and that's an example of a punitive damages. You've been so over the top, and you've been such a nasty landlord because you didn't have a property manager that they sued you not only for actual damages, but for you name it. And you have a jury trial, and the jury says, those are such awful people that own that property, we're going to nail them. And I have seen that happen. And it's ugly, and nobody wins, and you're not covered for that. So you must always use, again, you notice the theme here? Property managers will keep you out of trouble. And Marsh Reddick's got great property management. Other exclusions are your share of what's called a loss assessment. Loss assessment is basically the HOA has a property claim or a liability claim and they don't have enough coverage to cover it. So even though we've got this scheduled in the liability section of the exclusions, you can buy loss assessment coverage on your policies, and that can be purchased and it'll cover either a liability or property claim. So when the HOA divvies up the overage that they have to pay on a liability claim that they lost, and they owe $500,000, they're going to divvy it up and give it to all of you guys, depending on what the CC&R say, and loss assessment coverage will cover that for you. Property damage to property you own. Well, basically, that's what the property side of the landlord insurance is all about. So that as long as you have a full landlord policy, it's not an issue, but we're not covering property that you own unless it's scheduled on the form. We're not going to cover any workers' compensation issues under a landlord policy. If you hire somebody at Home Depot and you bring them out and you have them work on your home and they get injured, you have them on the roof and they fall and hurt themselves drastically, you're in big trouble unless you have a workers' compensation policy, and chances are you do not. They use property management services because Marsh Reddick's only going to send out people that are licensed and insured to your property. So if one of their employees slides off the top of the roof and hurts themselves, their workers' compensation will pick that up. We're not going to cover the use of boats and cars and airplanes here. That's kind of silly, but they have that in there. A lot of tenants want to have daycare operations, and this will vary from state to state and company to company. Some will cover this. Most of them will not. They hate it. So our suggestion to you is never allow a tenant in a single family home to have a daycare operation. And then fungi and pollutants are always excluded by insurance companies. They just are. You can. Yeah, go ahead.
I wanted to mention as well on the HOA loss assessment. That is becoming a very common thing right now in Florida. I own a condo in Sarasota, Florida, and we are $10 million short on our insurance, and I had to get a loss assessment coverage on my HO6 policy because of that. And that's a very common thing. Sometimes it happens with HOAs, especially in different states because of the condo collapses that have happened, and some HOAs are not able to get adequate coverage for the buildings themselves.
Yeah. So yeah, that's a very inexpensive, very I hate to use the word cheap, but we'll say inexpensive. And that's something that you need to know that you can get that coverage. Here's some things we also want you to know about liability. Certain states, and for property as well, certain states can affect your coverage. In Texas, they were famous 20 years ago or so for a famous mold claim. You get $5,000 of coverage from most insurance companies for your mold, but you can buy more if you want. I've never had anybody buy it though because it's so expensive. People just don't buy it, but it's there available if you want it. Tennessee and Florida, you wouldn't think of it in Tennessee, but around the Nashville area, they have sinkholes. Florida, of course, has certain areas with sinkholes. Kentucky mine collapse protection you can purchase if you want. I don't think there's any of that in the Clarksville area. If you buy closer to the Smoky Mountains, you're going to run into mines. So that's just something to be aware of. You can buy that coverage, so you don't have to worry about it. So there's some insider tips we're going to give you here. These are things you need to know. We're going to go back to the vacancy because as Christy mentioned, this is an incredibly important thing. And we talked to you first about the Ice Angel issues. Just as long as your home is winterized, you're good. You're not going to have any problems with coverage. But you might have a home that's vacant, fully winterized, but it's January, February, and you're in Indianapolis, maybe, or maybe you've got a place in Michigan outside the Marsh Reddick Square, and you can't get a tenant because no one's moving during that time. The areas that Marsh Reddick is in, I don't believe there's an issue there. But if you get in the higher, Northeast, you get into the Michigan, Minnesota, places like that. If you think of the weather, people aren't moving as often in the wintertime unless they have to. If your property goes anywhere from 30 to 60 consecutive days of vacancy or unoccupancy, coverage is suspended. Now vacancy, when your house, we can look at the very bottom, the house is not considered vacant when it's being fixed in between tenants. you're doing your cosmetic restorations, maybe you're putting new carpet, you're painting, you might have to put in maybe a new cabinet or two, water heaters, things like that. As long as that's going on, the property is not considered vacant. But once it's ready to go and to show, the clock starts ticking. And I put 30 to 60 days for a reason. It depends on the contract that companies use. Most companies use 30 days, and I would, in my own mind, if I didn't know insurance, I would figure, hey, I got 30 days. With our Safeco product, you have 60 days before the vacancy clause kicks in. When it kicks in, it's pretty nasty. You don't have any coverage, the vandalism coverage, you don't need glass coverage, theft coverage to, like, if someone goes in and steals all the copper pipe out of your walls and it's been over the 60 days of vacancy, there's no coverage for that. But the biggies, fire and water damage, that can cause a tremendous amount of damage to you. If your property is vacant with the Safeco contract after 60 days, there's no coverage. So, and this rarely comes up, by the way, again, particularly with property management, because you get a tenant in there. Their job, they're not making any money until you get a tenant in there. So they're going to get a tenant in there as fast as they can. Be aware of these things, because if you just have a situation where you don't have it, there are remedies to this. We can get ourselves a different policy that will allow for vacancy and temporarily assign it. Annually, it's an expensive policy, but you only buy them for a very short period of time. Once you've got a tenant in there, we remove that policy and reinstate the Safeco policy.
Yes,
so it works
and
really well.
That's definitely happened to me several times. You know, I've owned properties over 25 years now, and in the past, you know, I've remodeled a property or a tenant's moved out and I've gone past a 30-day limit, and I had to switch to a vacant home rental policy, and it's really was not expensive. It was like $80. It's very inexpensive to do that, and it's vital, because you don't want to be past the 30 or 60 day vacancy deadline and not have any work being done in the house and have anything happen. So I learned that very early on too, thankfully, from Marcia Reddick.
Yeah, so it's good information to have and be aware of. The next tip I want to tell you back, actually we'll call it one, if we're talking about the frozen pipes again, and I won't go over that again because we hit that pretty hard, but just stay in touch with your insurance agents whenever you have any kind of a vacancy issue, and your property manager knows. If you don't have a property manager, stay really tight with your insurance agent. But stay in touch with your property manager, what's going on, how they're doing, because sometimes, you know, they manage hundreds of properties and you just want to make sure it's human, something might get missed. So you want to make sure that if you've got a property that's approaching, you know, 30 days or 60 days, depending on your contract for a vacancy, make sure everybody, the agents and the property managers, know about it so we can address it for you and get it taken care of so there's no issues with the claim. Here's one thing to be aware of. You can buy a really inexpensive policy, or you could accidentally buy an extra cash value policy, which is inexpensive compared to other policies. And that occurs sometimes when it becomes automatic, it occurs because it's in a contract. Some companies will put into the contract that says after, some say 15, some say 20, some say 25 years of age, a roof is going to be depreciated if you have a fire, because a roof doesn't have a 100-year life. It's got, in the Midwest, maybe a 20-year life. It has to be replaced. And when a property flips to ACV, or if you buy a policy to save money because you're looking at your cash flow, and you're not paying attention to your exposures, when you buy a policy with ACV, bad things happen if there's a claim. The claim example is this: you have a $100,000 claim, you have an actual cash value policy, it's a 30 to 40-year-old home, you're going to see minimally a 30% depreciation on that. So out of your $100,000, you're going to get $70,000. Not a good day when you've had that message from your adjuster. It's a very bad day, in fact. But if you have a replacement cost policy with building codes, we pay the $100,000 less your deductible. It's very simple. You want to stay away from the extra cash value policies. You only use those when that's all you've got. And sometimes that occurs, but we've never had that situation with a Marcia Reddick client. They don't sell those kinds of properties to you to get in that position. From a deductible standpoint, I mentioned earlier, from a single family home, you want a $2,500 deductible. The larger units, the 3 to 4 unit homes, you want a $5,000 deductible. Wind and hail deductibles are typically going to be given to you in certain zones, Texas, Mississippi, Alabama, places like that. Oklahoma, they're going to have special wind and hail deductibles because that's where they pick up the tornado coverage or the hurricane coverage. You can see 1 to 2%. A lot of companies are moving to a flat in those areas, 2% deductible for all kind of insurance, not just wind and hail. Travelers is doing that as an example. Not to existing policies, they're maintaining the coverage, but if you buy a new one from them, you're going to get a 2% deductible. 2% against $400,000 policy is an $8,000 deductible. It's a little stiff, but in some areas you have to just do that. It's part of doing business. And newer properties, you've got years before that's an issue, so you can reserve for that. Where you buy affects what you pay for insurance. If you buy in the coastal areas, if you're buying in Fort Lauderdale, it's going to be expensive. If you're buying in Oklahoma, salt to the earth, but it's going to be more expensive than if you buy in Texas or in Tennessee. You get down in Harris County in the Houston areas, it can be expensive. It depends on how high the property sits. They worry about flooding issues and wind issues and how far back from the coast it sits. I mentioned Fort Lauderdale, the east side. The west side where Marshall Reddick is in Florida, those rates are normal. It's like buying something here. It's just not that big of a deal. Coastal Carolinas, you buy something out in Cape Hatteras, it's going to cost you an arm and a leg. It just is. But we're not looking for those, I don't think. So the other things you want to look at is, where you buy affecting it for your lower rates is Austin, where Marshall Reddick is, Clarksville and Oak Grove, where Marshall Reddick is. Arizona is low on the cost. California actually is low cost. You may not think that it is, but compared to other places, it's a low cost insurance, except for the brush zones. We all know the story about that. And then there is, the affordability issue and the availability, not the affordability, the availability issue at the moment in California. But we have lots of markets. We're still able to handle it. Indianapolis is considered to be a relatively mild climate, and their rates are pretty reasonable. Boise, and again, as I mentioned, Florida, coastal, the inland side, the Gulf Coast side, much more affordable than the Atlantic side. Newer properties are always better to buy. You have all kinds of things going for you, discounts on new roofs, everything's new, and you get very low rates. And the rates will go up as the houses get older and as rates go up because it costs more to repair properties. If you have a roof that's over 15 years of age, that's when a lot of companies will put you in an ACV roof that's only for the roof, not for the whole property. That's where the actual cash value and depreciated roof repair. If you're buying a property that's 20 years old and it doesn't have a roof, if you can, get a concession on replacing the tiles on the roof. So then you can get not only a better insurance quality of insurance, you can also get a big discount on your insurance. New roofs bring a huge discount. We like to see from a pricing standpoint, this is what Marshall Reddick brings you in Texas, up to 2,200 square feet typically, unless you're buying a fourplex, obviously it's larger. But on a single family home up to 2,800 square feet is your best price point. Do not get one with a pool. It looks great on the ad when you're trying to rent the house. It is just lovely. But that's a claim waiting to happen to you and to your tenant. Don't go there. Our advice anyway. And a lot of times on properties that have some history behind them, we might pick it up for you when we're doing a rating for you. If we see something, we'll notify your realtor and just make sure that there's just some concessions there, or just make sure that all the work was actually done when we see a claim. That's to protect you. Personal aspects of your insurance, and how are you affected by this? You don't see this in California. We're not used to this. In California, when you buy a homeowner's policy or a landlord policy, no one's running an insurance score on you. They're looking to see past claims, but they're not looking to see any aspects of credit. Outside of California, most states will run a credit score, or really what they call an insurance score, which is what they call a soft credit hit. It just shows as an inquiry, doesn't show any points or anything like that. And we also check, like I said earlier, we check for prior claims. But someone, let me just put it this way: your credit score. I ran on a property. I couldn't believe a quote I was doing for one guy years ago. So I ran on a property I owned at the time in Clarksville. I put his data into my policy, and I re-rated it, and it was 50% higher than what I was paying based upon his insurance score. So you want to be competitive to other landlords. You want to be able to come in there and maybe drop the rent a little bit underneath them and yet get more money because your insurance is so much less. That's where you work with Reed and your realtors to maximize your credit score that you have with the banks and other credit institutions, so that when we finalize the insurance, we make sure that you have the best possible rate that's available to you. Can't underestimate, rather understate that enough. It's huge. And this is a nice one as well, pay in full. Most companies will give you a pay in full discount, but a lot of times the premium is so high you don't want to pay the whole thing. You say, I'll just suck it up and I will pay more so I can pay for it over time. Well, if you escrow your premium or impound it, a lot of people call it, with the bank and have the bank pay the premium annually, you're getting the annual discount and yet you're paying monthly. It's kind of a cool deal. Other number of units you have, a lot of companies will not insure you if you own over 4 or 6 or sometimes 10 properties. We can take in our Safeco program, we can take up to 20 units without asking. We have that privilege as our agency. We can go to 25 with a phone call. So you want to buy a lot of properties, we want to do it under the Safeco program. Otherwise, you're out into a commercial format and it's far more expensive. Tenants' dogs can be challenging, so you need to protect yourself. Work with your realtors on that. Do not, if you can all avoid it, rent to anybody that has a breed that has a reputation. Let me just put it that way. A lot of cities have lists, what they call a vicious animals list. You don't want to insure, rather you don't want to rent to anybody that's got a dog on that list. Now, if they hand you an emotional support certificate they bought on the wire, that's not enough. But if they have something from a psychologist or psychiatrist that says this is a support animal, this must be, or the person's blind, he needs a dog, and it happens to be a Rottweiler, we have to call the insurance company to make sure it's okay. Otherwise, it will still be excluded, but usually the companies will waive the exclusion in those cases. Be aware of it though. Some insurance companies will have sublimits, that $500,000 that we mentioned that's on the preferred insurance policies. Some companies will give you $50,000 of animal bite coverage. That's all they will give you. Some companies will give you nothing. So you have to know what you're doing. That's where property management comes into play. They will work with you with tenants, and they will call us, and they always call us, it seems. I'm sure they're calling the other agents as well. This is the situation, what can we do? We know with our Safeco policy, we do not have a animal exclusion at all. It is, we underwrite up front. If someone tells us they're bringing in a tenant with a Rottweiler or a Pit Bull, and it's not emotional support, we'll tell them we'd rather not, but you also have fair housing issues and you do what you have to do. Just make sure that the tenant brings you a renter's policy, which really is the other part of tenancy. You want to make sure they buy a renter's policy for property and liability protection for a lot of reasons. One, the dogs. Two, you're not responsible for their property. We get calls regularly from tenants saying, gee, they had a fire, they had water damage, and all of our stuff was ruined. Can I bring a claim under my landlord's policy? And we say, no, you cannot. Do you have a renter's policy? Because that's where your coverage belongs. The other important part about this, we didn't mention it here to any great extent. You notice I'm said here, rather, that renter's policy also pays for additional living expenses. What that means is that we mentioned earlier, if they move out while the property is being rented, they're not paying you, they're not paying the property owner, they're paying the Marriott Residence Inn or Extended Stay America to live there. Now, if they have a renter's policy, if you put it in your lease to make them have that, they're going to get some assistance from the insurance company to pay that rent. And with that assistance to pay that rent to a hotel or a longer term stay situation, you have a better chance of bringing them back if you want them back. Now, if you don't want them back, I suppose that's another issue, but usually you want your tenant back. You don't want to have to go to the expense of re-renting it. So that is something that you can do. So the renter's policy will help your tenants with that. And I mentioned here, some companies will not pay for vandalism coverage from a tenant. The Safeco insurance company generally will. They will consider it a single deductible, maybe twice if there were two separate policies, separate incidences that were very, very, very clear, but they'll typically consider it a single deductible. We've seen other companies, not to be mentioned with good hands, that have had multiple deductibles that they've applied. Doesn't happen often, but it can happen. Loss of income protection, we mentioned that. You can have that coverage, but pay attention to the dollar amount. We will cover up to 12 months of downtime in these policies. And if your rent is more than this, it's pennies on the dollar to increase this rent. You can increase that to $18,000 or $19,000 if that's what you really need. And that might cost you $20 maybe a year on the policy. So you definitely want to take care of that. This is huge. This looks stupid. I will use the term, but this is huge. You must let us know anytime a change happens to your loan, or if you move. You must let us know this. Even if you just simply change an email address, you must let us know this. Number one cause we have in our agency of policies canceling is not because people are upset. It's because the lender sold the loan and we didn't have the new lender's information. We built the old lender. Old lender doesn't send it to the new lender. They don't care. That's not their property anymore. They don't have a loan on that property anymore. And then you get a cancellation notice. What we don't want you to have is have a claim where there's no coverage. That is, again, not a good day for anybody. So what we'll do is we will ask you to let us know each and every time there's a change in your loan. Or if you change home addresses, we need to know this information. I will tell you, and this isn't shilling for CMG. CMG is the only lender we deal with that regularly sends us changes in their loan structure, because they will, after do the initial information on the loan, they will change mailing addresses 3 or 4 months into the policy. You will notice they even change your loan number. They tell us that. No other lender tells us that. So you always want to work with CMG. That's the only way to fly. Reed's got a great program going there. Quickly, when is $1 million less than $500,000? When you buy a commercial policy, because it's $1 million in the annual aggregate, Safeco says $500,000 each occurrence. You could have 2 or 3 occurrences. But this is all the commercial policy is going to pay in the year. So 2 more claims, Safeco's $500,000 policy is much, much less, is a much, much better policy for you. You get yourself an umbrella, you've got it, and you've got that coverage as well. Plus your business forms like this, it's very hard to get an umbrella carrier, your personal umbrella carrier, to bring you in. So there's that that coverage issue right there. There we go, got it back. Okay. Can you help me with that, Christy, with that flip up in the screen? I can't move it forward. There you go, thanks. Pricing again, use your deductibles wisely, and we see uniformly, use them all across every policy you have. Increase your coverage, your deductibles on all of your policies, your home, your renter's policy, your auto insurance, all of it. Increase your deductibles on everything you have, and you're going to find over a period of 2 or 3 years, if you increase everything, you're going to be ahead of the first deductible that hits you. So you haven't lost any money, but you've saved it. And if you don't have any claims for 5, 6, 8 years, you are so far ahead of the game. Always increase your deductibles. Go as high as you can possibly manage, that you can reserve for, and do it on all of your policies, not just your landlord policy. Otherwise, it really doesn't make any sense. Review your coverage periodically. We'll do that with you. You can look at it online. You can call with our Safeco product. You can call 24/7 review with customer service representatives that we've established for you. Anytime, day or night, you can have that conversation. Always, 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 if I said this already, use professional property management. It is crucial to the outcome of successful claim and the outcome of successful investment. It just is. You're going to have it. Condominiums are just like, we're just about done here. Condominiums are just like physical properties, except we're not covering the building. Other than that, they are the same. The only thing that you have to be aware of on a condominium is that the CC&Rs determine what your coverage is. The HOA policy says it's going to cover everything. The master policy says we're going to cover everything that happens to all of our properties. That's what the policy says. We're going to cover fire to the cabinetry on the inside of the condo. We're going to the drywall, the laundry room, the bathroom, everything, all of that. We're going to cover that. And the CC&R say, no, you're not. We're going to make our, and then from that point on, I actually stopped mid-sentence on purpose here. We're going to make our owners, go out and get coverage, because we are only going to allow you, insurance company, to insure to the common area wall, the firewall. We're going to make our owners cover everything inside that firewall, or everything inside the drywall, or anything that's been improved, depending on what the CC&R says, since the property was initially sold. And that's a more generous one. But always be aware of the fact that you have an interior structure responsibility of some sort with a condominium. It's even more important to have property management on a condominium, because they can be tough. They're good properties, they're good rentals, but they can, I still can't do it. So they can be tough if you don't have professional property management. You always want that. So go for it. Umbrella policy, really quickly, we're going to hit this and we're pretty much done. The professional, when you start investing in properties, even if you don't, if you have any kind of a positive balance sheet, you want umbrella protection. What umbrella policy does, basically, it sits over the top of the liability limits of a home, landlord, or car insurance. We get questions a lot. Once I get an umbrella policy, do I need all these other policies? Absolutely. Again, think of it as an excess policy, E-X-C-E-S-S, excess policy. It's excess of these primary policies, and these policies and the umbrella policy will require that you maintain a minimum level of coverage. I think on the next slide we can point that out, Christy. So typically on your homeowners policies, insurance is easy as 1, 2, 3. This is how an umbrella kind of looks structurally, and they're going to require minimum threshold limits of $300,000 on all of your primary policies. On auto policies, they're usually $500,000. So that's kind of how those structure out. And on the next slide, I think we show you what our umbrella looks like. Or not. So I guess we don't. So do you have any questions? And if not, we're back to Christy. She's the one here. Oh, and that's us, by the way, if you want to get a hold of us. Again, this is what we do. Let's go to the next slide. We're running out of time.
Okay.
And this is how you get a hold of us. That's my email address. That's my extension on my phone number. We have brick and mortar companies. We also have, when you buy our Safeco and our Travelers products, we have 24/7 customer service representatives for you. So we have a great program built in for the right people. There you go, Christy.
Okay. So I just want to talk to you all a little bit about what you can expect from me as an advisor if you need help either buying here in Los Angeles, or if you need help in purchasing properties in other states. As I had said, I have bought 22 investment properties through Marshall Reddick, and I still have 11 investment properties today. And one of the most important things you can expect from a consultation with an advisor like myself is why, the goal setting, how, evaluate your options, when, decide on your time frame, what, setting your criteria, where, identify your markers and areas you'd like to buy, and then who, introducing you to all the key players, which would be Reed Hazard getting pre-approved, which would be Stan with insurance, which would be one of our agents in other states if you're wanting to buy out of state. If you would like to reach me to speak with me on anything, even just to talk about my experiences or help you in any way or talk about insurance, you can reach me at my cell phone number below and my email, christy.dietz@marshareddick.com. And I definitely would love to help you in any way, shape, or form. I truly believe that I would not be where I am today if it would not have been for Marsha Reddick. We wanted to thank you very much for coming today to our presentation, and we would love to help you in any way, shape, or form, and I thank you.
And if anybody has any particular questions specific to your own property issues, email me. Be happy to answer them for you if I can.